Hello and welcome to this week's edition of Energy Frontiers, proudly brought to you by the African Energy Chamber, the leading energy sector advocacy group on the continent. I am Justina Okechukwu, and these are some of the biggest energy news making the headlines at this time. Malaysian energy giant Petronas is exiting its operations in South Sudan after a 2-year divestment process. This decision aligns with Petronas' focus on a greener future and changing industry dynamics. In a separate announcement, a UK-based oil and gas company, Savannah Energy, has terminated a planned $1.25 billion deal to acquire Petronas' oil and gas operations in South Sudan. The decision comes after months of negotiations failed to reach a mutual agreement. A Houston-based energy company, Valco, has secured a major deal in Equatorial Guinea to develop the Venus oil field, which holds an estimated 20 million barrels of oil. This comes after the finalization of a production sharing contract with the government of the West African country. Following this contract, commercial production is expected to start in 2026, with peak output expected in 2028. Predator Oil and Gas Holdings says it is advancing drilling plans for the MOU-5 in Morocco. According to the Jersey-based company, the well, which is estimated to hold 5.9 trillion cubic feet of gas, could unlock vast gas reserves and potentially supply electricity to the North African country. Helium One Global says it has successfully deepened its Ntumbula West 1 well in Tanzania and encountered significant helium and hydrogen gas. The next phase involves preparing the well for testing, which could confirm the commercial viability of the gas reserves. The Rockefeller Foundation says 72 countries, particularly in Africa and Asia, need a staggering 8,700 terawatt-hours of clean energy by 2050 in order to meet both global development and climate goals. That's twice the amount the United States produces annually. The report warns that these regions, home to 3.8 billion people, risk being left behind if they fail to transit to clean power sources. Vestas, a Danish wind turbine giant, has secured a major deal to supply 32 of its 4.5 megawatt turbines for the Kangela Emuyeni wind farm in the Western Cape of South Africa. The 144 megawatt project, which was ordered by the African Clean Energy Development, is expected to start generating electricity by early 2026. And that's the summary of your energy news headlines. It's earnings seasons across markets around the world, and global oil giants are raking in the profits. We look at some of the facts behind the figures when Energy Frontiers return. This is Energy Frontiers. Now, big oil companies are back in the news with the release of their quarterly earnings. The financials from Saudi Aramco, Chevron, BP, and ExxonMobil, among others, come against the backdrop of headwinds in oil production, supply, demand, pricing, including geopolitics. In this interview chat, Abhi Rajendran, the head of global oil and downstream markets at Energy Intelligence, he walked me through key line items in the earnings and what the drivers were. Take a listen.
The earnings results from this past quarter from big oil, big energy, including the national oil company Saudi Aramco, they were pretty mixed. I would say, I think the upstream results were by and large as expected. especially on the oil side, there was certainly some weakness on the natural gas side because of weaker natural gas prices. But I think certainly that we saw a downward shift, and especially on the downstream parts of the business, compared to the last couple of years. Now, of course, 2 years ago when Russia, Ukraine, that crisis first began, we had a huge jump in refined product prices, even petrochemical prices, along with every energy price, and especially downstream refined product prices were elevated for a couple of years, and they've started to come down. They started to come down in part because of some demand questions, but also supply ramping up, in terms of refinery capacity. And so the downstream parts of the business, I think, were the areas where big oil results were quite soft. So I mean, I think, look, like generally speaking, we've seen oil prices on a little bit of a downward trajectory over the last couple of years, but it's been a bigger drop for refined product prices, for margins, and for cracks. And that's something that big oil definitely felt. But they still put up pretty strong cash flow numbers, pretty strong earnings results relative to history, relative to kind of going back to before the Russia-Ukraine crisis. But still, just kind of normalizing a little bit from some excess profits over the last couple of years.
Yeah, so how did these oil majors navigate the pressure on refining margins and production costs?
All these companies were sort of expecting some of these supersized profits and margins to normalize at some point over the next couple of years. Some of the initiatives they've been taking are on the cost side, on the efficiency side, optimizing both of those, optimizing CapEx as well. So they've been, pretty prudent and pretty efficient on the cost side. That's definitely helped them, to kind of navigate, this downdraft in the downstream results. So again, I mean, I think if I just kind of look across the set of big oil, big energy companies, the results were still pretty solid, but it was definitely much more driven by the upstream than the downstream. But again, the companies generated solid cash. Some of the companies that still have like a slightly higher, more elevated level of debt, they were able to reduce their debt, or at least their net debt. So net, I think the results were still quite solid. Just that the expectations had to be lowered after what we saw for the last couple of years.
So where do you think the main pain points are for these big names in the industry?
Yeah, I mean, I think the main pressures now are over the next couple of years to think about the fact that on the demand side, especially for oil, that growth may be slowing down, right? That the global oil market may be starting to feel the pressures of electrification, of decarbonization, energy transition, especially for gasoline demand and in Europe for diesel demand as well, for cars. And so I think that's something that the big oil, big energy business model will have to keep an eye out for and adapt to, which is to see what that slowdown of demand growth looks like. I think even this year, demand growth is going to be weaker than many expected a couple of months ago. It's still going to be solid demand growth, but certainly not some of the more robust forecasts that were projected a few months ago. So that's something that they're going to have to look at over the next couple of years. And then on the supply side too, I mean, the supply side, look, the oil market is it has a lot of supply and a lot of capacity available. OPEC Plus is sitting on 5 to 6 million barrels a day of spare capacity. There is still growth coming from the Americas, both North America, driven by shale, of which many of the big oil companies are pushing that growth, but also Latin America with Brazil and Guyana in particular. And so there's supply growth still coming, and so I think we've seen this downdraft in downstream results. My expectation is that we'll probably see a continued slide in oil prices as well over the next couple of years. Not the 80s, 90s that the companies enjoyed over the last couple of years, but probably more the 70s as the market has to digest both slowing demand growth and also a bunch of the supply still coming online. So I think that's kind of the next challenge. And again, for big oil, big energy companies, it's going to be all about managing costs, delivering efficiencies, optimizing their wellhead, and lowering production costs wherever they can. And then also being careful about CapEx and making sure that it aligns with maybe a slightly lower cash flow outlook going forward, but also the fact that they still have to return a lot of cash to shareholders in the form of dividends and buybacks. So that those are, I think, the key challenges for big oil to think about the next couple of years.
We are done dreaming of an industrialized Africa. No more enduring long journeys in darkness. No more imagining life without constant power. We are done. We are done. Done tolerating 24 hours without power, load shedding, blackouts, and power cuts. Enough. Imagine a life where our abundant natural resources can't power a generation. We can't cope with that reality. 600 million Africans still lack access to power. We have the solution. It's time to turn imagination into action. African Energy Week 2024 is the platform to implement change, sign deals, and take decisive action. And implement. Join us. Invest in African energies. Energy growth through an enabling environment, and be part of the movement that brings hope to millions across the continent. It's not just about power. It's about empowering lives and giving African hope. Be there to witness the transformation. African Energy Week 2024, where imagination becomes reality. Secure your seat now. Don't miss out on African Energy Week 2024. Visit our website and buy your tickets today. Let's light up Africa and create a brighter future together.
At the time you need to build that project. Sign, baby, sign.
Welcome back to the program. Namibia is rapidly emerging as a significant player in the global oil and gas industry. With the discovery of substantial hydrocarbon reserves, the country is drawing significant interest from international investors and energy companies. The Namibia Oil and Gas Conference, scheduled for August 20 to 22 in Windhoek, the capital, will serve as a platform to connect local and global investors, develop partnerships, and drive deals within the emerging hydrocarbon industry. Jason Kasuto is the chairperson of the Economic Association of Namibia and one of the organizers of the upcoming summit. I caught up with Jason in this interview, and he tells me why conferences like the NOGC are important for the energy sector and the wider Namibian economy. Let's listen.
They're extremely important. They allow, firstly, for locally a dialogue to take place, a dialogue that is able to map out key expectations. What are the expectations of our international stakeholders or our international oil companies? What are the expectations that we can deliver on as domestically, right? What can we achieve? What can we not achieve? That needs to be talked about. And then also, what are the lessons that we can learn from our Pan-African sister countries like Nigeria, Ghana, and many others? So we believe that there are best practices. There's an opportunity for learning. Of course, Namibia has always been a late start. We got our independence in 1990, so we came quite late, but that allowed us to learn from the pitfalls experienced in other nations. And that's why it's very important for us to also be sharing with our brothers and sisters from West Africa.
Right. Yes. When I looked at that program, I was in awe of the robust plan that was in that program. I saw the synergy within the East African region, the West African region, and also for the Southern African region. That was really robust. And now, looking at all of this, what investment opportunities are most prevalent in Namibia's oil and gas sector for foreign investors?
So I think we need to look at it in the two phases. Currently, we are still in exploration, and that should be for the next 5 years, if not 6 years, but possibly 5 years. And then after that, we hopefully would be discovering our first oil or producing or going into production. During this phase, this is the phase where there's a lot of local content opportunity. Now, I think that investors really primarily would have opportunities in the infrastructure space, especially the infrastructure space that would be able to support the oil and gas industry. And also to be able to see, I think more especially Pan-African collaborations, especially in this phase, to capacitate local businesses who are committed, who have got some level of capacity that is good to be able to just get a further kick from a Pan-African collaboration. I see that as really the opportunity during this phase. Obviously, the IOCs are raising their own funding and capital outside. That requires deeper pockets. But I would say that local content partnerships are very crucial, and those are the opportunities during this phase.
Right. That's interesting to note. Now, how will the conference facilitate that the partnerships we are likely to see between local and international investors at the conference?
Absolutely. So we encourage people locally and internationally to register. Currently, we have got over 600. Our limit is 700 delegates, right? So we may become oversubscribed. So once they've registered, they will receive an app. And that app is there to arrange B2B meetings, to make it more seamless to arrange B2B meetings. But the program would be able to guide in terms of the panel, the speakers that will be there. It's really up to the delegate to really take the opportunity, ensure that they arrange the meetings that they need to arrange, ensure that, they make the connections they need to make as an EAN. And remember, we are hosting in partnership with the Namibia Investment Promotion and Development Board, who sit in the office of the presidency and whose task it is to ensure that there is B2B collaboration between investors locally and internationally. So this whole platform is steered towards ensuring that we create that environment.
In the meantime, have you sent in your nominations for the African Energy Awards 2024? The window is still open for you to select industry giants who have made remarkable contributions to the energy sector. Award categories include the ESG Leader of the Year, Deal of the Year, Local Content Champion, and more. To find out more about the awards and learn more about the African Energy Week Summit, please visit the event website at www.aecweek.com. And that's the package of Energy Frontiers for you at this time. We appreciate you for making the time to watch the show as always. Remember to visit the website at www.frontierafricareports.com, like all the video editions, send in your comments, and subscribe to our YouTube. Kindly follow us as well across all our social media platforms as indicated. I am Justina Okechukwu, and it's bye for now.